Hello everyone, welcome back. I'm Ruben Torrens, and actually I haven't been around. I haven't posted any new videos in the past, I will say about 2, 3 months. One of the reasons is that your support, guys. Thank you for the support. Thank you for the confidence. I got a lot of calls, way more than what I expected from you guys, from the people that is watching my videos. So thank you for the support. And on top of that, we got to the end of the year. And although I am not making financial product sales anymore, I still have clients from my prior life, and and I had to take care of them because, well, guess what? Beginning of the new year, beginning of a new RRSP season, and everybody goes crazy putting money in RRSPs. And this is actually what I want to talk to you about. The RRSPs. RRSPs is a great tool for investments, but it's not for everyone. And how would you determine if it's for you or not? And there's a way. It's not that simple, but it's a way that more or less you can tell if you are within the territory of RRSPs or not by looking into your future and looking into the income that you will receive on your future. If by age 65, you will have more or at least 40 years of Canadian residency. If you only have less than 40 years of Canadian residency, probably this video is not for you. You should go to another video that I have, is how the all-day security and the guaranteed income supplement change, how the composition changed when you have lived in Canada for less than 40 years by age 65. I will leave the link to that video in the descriptions of this video below the video. But if you have at least 40 years of Canadian residency and say you are single and you will earn less than $25,000, or if you are a couple and income together, a couple over the age of 65, you will have less than $42,000. You will take about those amounts if all your income, excluding RRSP, so I mean all-day security, plus your Canada pension plan, plus any other income that you cannot control that you will receive it, such as an employer pension. If you work for an employer that offers a pension plan for their employees, well, you have to have that pension. So you have to add that. You have to figure out how much your income will be in today's dollars at age 65 and after. And if you think that it's going to be, if you're single, less than 25,000 and couple, less than 40,000, maybe RRSP is not for you. And if you are an individual, now, regardless of you're single or married, as individual, your personal retirement income will be $80,000 per year or more. So maybe RRSP is not for you. And this is why I always tell people that if you are in any one of these two territories, stay away from RRSPs or at least have a meeting with your financial advisor and make sure your financial advisor understands your government pensions. Not every financial advisor do, and how these pensions get clawed back, and they will be able to help you or to guide you on how to do that. I know you just give me a call, another call. I offer 30 minutes of free financial consultation. So, but this is the situation. But I want to do more. Before going into what I prepare for you to show you why this happens, uh, I like to tell you something else about your Canada pension plan because it's difficult to estimate how much you will receive from Canada pension plan. And what you can do is get your statement of contributions. You either go to your My Service Canada account online and you can get access to your contributions there, or you just Google ISP 2000 and you will get a form, just one-page form to request your statement of contributions by mail. So either way work by mail, you have to wait a little bit longer. Of course, it's going to take about 4, 5, 6 weeks until you receive your document. But let's go into that little presentation that I prepared for you to show you what the effect of an RSP. First, we're going to take a look of the advantage of an RRSP because, of course, there is an advantage of saving in RRSPs. And for that, I will use an example that I bump into it very often because when I was active in the business, because my office was inside an accounting firm and the accountants send the people who are doing their income tax, and they fall in this situation that I will share with you, and this is what happened. But regardless, you have a part-time job or not, so you will be able to determine if RRSP is for you. But here is what happens. Normally, people with part-time jobs, this is what happened to them. Say Joe, in this case, we're going to call this guy Joe, and in 2022, Joe's income was $50,000, and the employer withheld tax for $7,457. This is in the perfect world. And but also Joe has a part-time job, and well, he earns another $20,000. But that employer withheld $1,121. So in essence, in 2022, Joe earned $70,000 in total, and he paid already into CRA, into Canada Revenue Agency, $8,578. What happens is when he puts his income tax together, so the total tax payable for a $70,000 income in 2022 was 13,376, less Joe's payments already during the year. The money was withheld from his income, so he still owes $4,798. So when the accountant tells Joe that he owes all this money, almost $5,000 in taxes, so well, obviously this is not a good news. Joe is not going to like it. And the accountant said, don't worry. And this is at the point that the accountant said, just don't worry. If you deposit $10,000 in RRSPs, you say make a contribution for 10,000, you will save, give or take, depending on the province in which Joe lives. So it will save $3,000 in income tax. And Joe is happy because, well, even if he had to take a loan, for this $10,000, he will never pay $3,000 in interest for that loan, depending on how long he repays the loan. So this is a great deal. It sounds like a very good deal. But let's take a look now what happens when Joe withdraws this $10,000 from his RRSPs. So now we will see the other side. Now Joe got to age 65 and he had to take his money out. And we will look at the type of income. So the type in this case is personal income. And let's say Joe earned in 2022 and 2023 $80,000. He will pay 30. He's a retirement, right? $80,000 of retirement income. He will pay, give or take, depending on the province of residency, 30% tax. But because he earned $80,000 already, and on top of this, he will take out his $10,000 from RRSPs, now he will have an all-day security reduction of 15% of this $10,000. So making the effective rate of 45%, 30 plus 15. So this $10,000 will cost Joe $4,500. But remember, when he put the money in, he saved $3,000 in taxes. This is based on this income because he earns this money. Now, what happens if Joe is a couple? So he has a spouse and they're both over the age of 65 and their income is around $40,000, excluding RRSPs. Well, in this case, give or take, depending on the income splitting, there's not going to be any tax payable. All-day security reduction is not there because they don't earn enough, but they most likely qualify for the guaranteed income supplement earning this amount. So here is what happens. The guaranteed income supplement reduction will be 50% of the $10,000, $5,000. Again, it take $10,000 out of RRSP, it costs $5,000 in pension. In this case, nothing in income tax, but everything on reduction of pension. Same thing if Joe happens to be a single person with a $25,000 per year income, including everything. This is including all-day security, guys, okay? So he's paying no income tax, most likely no income tax, depending again on the province of residency, and the GIS reduction will be another 50%, 50% again of the $10,000, so another $5,000 again. So it's still not. This is still not convenient. This is the reason why, if you earn within this parameter, if you think that your retirement income, when you retire, your income from all sources will be within these parameters, maybe you should stay away from RRSPs. Make sure that don't take any decisions on your own if you don't know, if you're not sure about tax table, that you discuss this with your financial advisor, or simply you can just give me a call. I'm not going to charge you anything for a phone call up to half an hour. After that, it's like the taxi cab, just we start charging. But no, I'm just kidding. Like, just give me a call for a consultation. There is no problem. So I hope I make the video clear. These are difficult topics. Uh, if you have any questions, you can ask me. You can leave me questions or comments below the video, or you can always contact me for a half an hour call. And other than that, guys, please don't forget to hit the button subscribe. It's very important. You're not gonna miss any future videos, and you're gonna help me a lot. You need to contact me. Just you can contact me to this email address. The email address will be all the contact information will be below the video on the descriptions. And other than that, thank you for watching, and I will see you on the next video.